Neha ma'am, our Vice President of Chamber of Tax Consultant, respected Dipesh ji, who is the President of the SG and SC group from the Chamber of Tax Consultant, our colleagues from the Delhi chapter, and all friends, ladies and gentlemen. First of all, a very happy new year to 2026 to all here. It's my pleasure that we are starting a series of webinar on the comparative study of the Income Tax Act 1961 versus 2025. It is also our great pleasure that to start this discussion, we have the top law officer of India on the issue of taxation here. We always call him NV. Before And this series of the webinar that we are proposing here, that will go through each of the Tuesday, and we will be covering different topics here, chapter by chapter. Yes, in between there will be some breaks due to the budget session here, due to the budget discussion, but we will like to cover the discussion on this issue, on the comparative study of the, and we will have the lot of stalwarts who will be deliberating on these subjects, and it will be our great opportunity to learn this new law into the new year. With this, as I mentioned, that this is the Chamber of Tax Consultant Delhi chapter, and we have the pleasure of Neha ma'am, who is the Vice President from the Chamber of Tax Consultant Bombay. May I request Neha ma'am to deliberate something about the Bombay CTC functioning here.
Thank you, Prakashji, and good evening, all. It gives me a great pleasure to speak about Chamber of Tax Consultant. It's an institution with a truly remarkable legacy. CTC is established in 1926, and today it stands as India's most respected professional body in the field of taxation and regulatory laws. Over the years, we have grown into a vibrant community of around 4,000 members, consisting of chartered accountants, advocates, company secretaries, cost accountants, and tax practitioners. The Chamber's journey has been shaped and enriched by some of the finest legal and financial minds of our country. Luminaries like Sri Nani Palkhiwala, Sri Arun Jaitley, Sri Soli Dastur sir, and Sri YP Trivedi sir have been associated with the chamber, contributing immensely to its growth, its thought leadership, and its enduring values. Chamber has a strong presence at in Delhi through its Delhi chapter and active study groups in Pune, Bangalore, and Hyderabad. Chamber's contribution to society and the profession has been wide ranging through seminars, workshops, RRCs, and study circles like we have today, which continuously supports and elevates the professional development of our members. Through expert representations to the Ministry of Finance and other regulatory authorities, we actively engage in thoughtful policy advocacy also. Through our respected journals, books, and publications, we continue to source knowledge and insight and leadership in taxation and allied laws. Before I close, I would extend a warm invitation to all the professionals present here to become member of Chamber of Tax Consultant. Your participation shall not only strengthen the chamber, but also enrich your professional journey through exposure, engagement, and lifelong learning. We would be delighted to welcome you into the CTC family. And thank you very much, Prakashji. Request to take it forward.
Thanks, ma'am. Thanks for guiding us here. May I request Saurabh Bhattacharya, sir, to read the profile of our speaker of the day and Venkatraman, sir, ASG. Please.
Mr. N. Venkatraman is the Additional Solicitor General of India, appointed originally in June 2020 and then again in 2023. He is serving as a key legal representative for the government in major constitutional, tax, and regulatory matters He is known for his extensive expertise in taxation, constitutional law like Article 370, Sabarimala, etc., and regulatory issues. He handles significant cases for the Union, advising on international agreements and representing the government in diverse legal fields. His key roles and responsibilities include basically representing the government of India in the Supreme Court and the High Courts. He is known for his expertise in indirect and direct taxes, international taxation, constitutional law, competition law, telecom, energy, and arbitration. The high profile cases where he was involved in are the landmark cases of Sabarimala, Article 370, etc. As in background, it can be said that he graduated in law in 1989 and began his practice under late Mr. C. Natarajan. He was designated senior advocate in 2006 and later become ASG. He frequently speaks to law students and public on legal and constitutional issues, and he played a significant role in many of the recent tax litigations that people are aware of. So, with this, we welcome the Additional Solicitor General to this webinar.
Now the floor is yours, sir.
शारदाम्भोज वदना वदनामुखे सर्वदा अस्माकं सन्निधिं क्रियात्. Here Prakash, Saurabh, Dipesh, Harpreet, Ashok, and Nega, who are all visible in the cameras, and those good friends of mine watching this program across. It's a pleasure to reconnect with all of you one more time on this occasion to dwell a little for a while. It's better I take questions rather than speak about it on the new tax code, which is to come into effect from the 1st April of 2026. Now, we'll all be wondering, this is the perspective, the divided perspective all professionals or even trade carries. What is the objective of this new code? So, has the government used this opportunity to reform the Income Tax Act or to rename the Income Tax Act? That's one question which keeps coming up again and again in various forums, or people confront us with this question whenever we meet. See, as a policy maker, as part of the policy making apparatus, these are things which we need clarity. We have made it very clear and explicit that this is not a reformation or an extinguishment of our old regime and bringing something, ushering a new regime. We never claimed it so, and we don't want to claim it so. This is a codification involving the core objective of simplification of the existing law. What needs to be weeded out? What needs to be retained from the old law will be retained. What needs to be nuanced from the old law to make it more clear, we will add it. So, the journey of this transition has a very limited objective. And that is something which all of us should be very clear. We have defined this objective, we have made this objective clear to everyone, and we have progressed with that objective. So when you test it, you should test by asking the question, is there an inconsistency between the objective defined and what has been sought to be achieved? You will not find it inconsistent. Now, if you superimpose your perspectives or objectives and say that it doesn't meet with your objective, it may not meet all the time. So, this perceptual disconnect or difference should be borne in mind when we walk through this law, either today or tomorrow, or even when issues come up for litigation. So, this is one area we want to clarify. Now, the second area, what people, it's better we first speak what people think, perceive could be detrimental in this law. It's better we speak that first, upfront. All it's a every law should be friendly, and we have brought this legislation thinking that it is friendly, and therefore, how we have thought it friendly, it's better we also try to put it across to all of you. So, the second question that props up in a tax professional's mind and in the minds of the trade is, look here, if it is going to be only simplification, you could have simplified the old act and retained it as in the old regime. You could have simplified the year itself. Why should you transit through a new code 2025 and say that this is a simplification of the old act? The answer is very simple. See, this is all perception. We could have done under the old act, we have done it under the new act, and therefore what? By doing it under the new act, do you mean to say that we have given a wrong signal or a message? No, we haven't. We said two things: simplification through a new code, but it will be a transition of the old law wherever needed. So once this perception is clear, what we have said is clear to all of you, then whether we do it in the old law or transit into a new law in a very more convenient manner. See, when you do it in a new law, the transition can also have lot of convenience in terms of its objectives, in terms of its implementation. So instead of amending the old law, we chose the option of doing it through a new code. The second issue which needs some clarity. Now the third point. Look here, what are you saying? You are saying it is for simplification, it is for clarity, whereas you have now substituted time-tested definitions, time-tested expressions with some new expressions. And this will unsettle the old thinking, and this will lead to new interpretation, and therefore keeping the pot boiling for some more years. And why did you do it? The third objection raised by many, or even all. The answer here again is very simple. Let's take one live example. Why did you change notwithstanding as irrespective? We'll take the simplest example.
I think there is some connectivity issue. Some connectivity issue, sir.
So like that, you can keep cataloging a dozen or two, saying that.
Sir,
Yeah, yes.
there was some connectivity issue, sir, in the last 1 minute, so we couldn't hear you, sir.
Oh. Are you hearing me now?
Yeah, now we are hearing you, sir. So just
Oh.
repeat, sir. Yeah, there was
Okay.
some connectivity.
Right. Now the third, my continuity is now gone. Never mind. So you were saying one is notwithstanding to irrespective, another is information. To our search of information is wider in scope, and yeah, third is Reason to believe now appears to be reason to understand. And therefore, you have put the law volatile. See, the answer is this. No doubt, notwithstanding has a judicial understanding, judicial meaning, and judicial affirmation. Now, we are becoming more and more global in perspective. Of course, the globe no longer is unipolar, it is multipolar. That's a different story in terms of its objectives on trade, in terms of its objectives on politics. That's a different story, but we are going global. So, it is our attempt to substitute a few expressions to be more aligned. And make it, if at all, for example, irrespective is a terminology, but notwithstanding, there is a compulsion for us to show that it actually overrides. Whereas if it is irrespective, then we don't have to trouble ourselves that far to reach to say that it overrides. It says if that is possible, ignore that possibility. Irrespective of that possibility, this is what we want to say. So the standard of meeting the thresholds is something, the choice of the policymaker. And therefore, this is not trying to unsettle any law. Attempt is not to unsettle. When you usher in a definition, you usher in with an objective. So it is not a visionless approach or a mechanical approach or some customary just to also run approach. No, these are all done with some thinking. Now, reason to believe, if you see why reason to believe is slowly becoming reason to understand, assuming it really conveys that meaning. Why? See the trend of judgments that is getting delivered recently in the last 4-5 years by courts. See, like every other aspect in life, the decision making process in courts are also undergoing a huge change. From a very strong feudal thinking, we moved to a traditional thinking. From a traditional thinking to a slightly conservative thinking. From a conservative thinking, we are moved into liberal thinking. Now, from a liberal thinking, we are now moving to citizen-centric, assessee-centric thinking. Now, the era of judicial review is forget your law, forget your intent, forget what you want to say. This is how we want to perceive the law, and this is how we want to interpret and implement the law. Only then it will be citizen-centric or reason-centric. It's all changing regimes. The dynamism of interpretation, interpretative skills is fast changing by courts. It is extremely difficult to stand up and contest a position for the government and succeed. It's becoming extremely difficult. So, if we continue to keep higher thresholds, and courts are going to be more and more lenient of that higher thresholds, then the only mechanism or apparatus available is to think what we need to do through a legislative process. If you are in the policy making tank, you will also think like that. You happen to be on the other side and therefore you think differently. This is not wrong. And you're going to contest it differently. And who knows, I may be part of it also after some time to contest it along with you. We don't know. We don't know. But what is the vision in which the map drawn have they run the race on the plan drawn? Yes. Have no doubts about it. So, with this background, let's see some of the provisions which you can understand See, it is not just the 1961 Income Tax Act becoming a direct tax code in 2025. Income tax law has a strong lineage and background in India. The first of its legislation were passed in July 1860 with 259 sections. Not sure how many know it. The first law is 1860 law. This was substituted by the 1918 Act, which got subsumed into a new act within 4 years as 1922 Act, which later unfurled into the 1961 Act, and now the present DTC Code 2025. So historically, ask one question to yourself. So you're all pundits, you're all experts. Whatever was the old regime and which looked intact has always been carried forward into the new legislation. So DTC is not a new experiment in that sense. Carrying the old legacy into the new law, new regime, has been the practice under the Income Tax Act. Have you not seen courts comparing the 1961 Act and the 1922 Act on several occasions? Why would they do it if the law is completely, one is Australia and another is say Singapore? One is apple, another is orange. Why would they do that? So the basic genesis and its evolution rather than growth. Growth may be an exploitation from the old, but evolution carries within itself inherently the old genetics. So this carry forward is nothing but a traditional past of what we have done. And for those who are very young watching this, we have seen regimes in India with a 97% tax. Out of every 100 rupees you earn, 97% you will have to pay taxes. And you will ask a question, was there any single citizen, honest citizen, who have paid such a tax at 97%? Yes. What was Neha referring 20 minutes back? Nani Palkiwala ji did it, even in that stage of 97%. We knew a client from Chennai who went and obtained an opinion, and he made it clear his fees is 5,000 rupees, but you have to pay 1,22,000 rupees for that opinion because he has to pay 97,000 rupees, 97% as income tax. That is why he is venerated, celebrated as a Mahaguru, either in constitutional law or income tax law for us, considered to be one of the greatest jurists. Ethics is something unparalleled with Naniji. So we have all this in the background, and now you decide how the new legislation is. What is the average rate of tax? 22%. Question is it competitive? Yes, it is competitive. And does it take care? It's a huge country. We have to take care of certain segment of people. So we have always been exempting based on standard deduction, based on exemption, all that. Now, almost up to 12 lakhs, if you can plan properly, the tax is either nil or very, very small, very, very little, up to 12 lakhs. So 1 lakh a month is a tax-free income. Is it affordable in a country of this size? We have made it as a convenient law. So these are all things. See, let me make one thing clear from the perspective as a policy maker, as part of the government. 90% we collect our taxes without any problem. It comes to us. What is being litigated is only 10%. But you may ask a question, oh, come on. For 10%, why are you making such a hue and cry? But now translate the numbers, you will be shocked. See, last year, say, our tax collection, both direct and indirect, put together is about 34 lakh crores. 34 lakh 1,000 crores or whatever you call it. That many zeros you add it. Now 10% of it will be 3.5 lakh crores 1 year, which is not a small size. And therefore it needs to be argued or litigated. To lose out on 3.5 lakh crores is not an affordable proposition by any nation, if it is due. Therefore, the new tax code, with all these in mind, wants first continuity should not be lost. That is one of the principal objectives of the new code. Right. Now, a broad overview of how this new code operates. See, it has 20, if you see the new code, it is 23 chapters with 536 sections. So for academic people who have academic interest, as against 47 chapters and 819 sections. 5.12 lakh words, if you want to be very precise. 2, no change in tax rates, tax residency, or other substantive income charging provisions. So second takeaway. 3, concept of tax year introduced against current dual concept of assessment year and previous year. 4, whatever sections stood omitted under the 1966 Act has been gracefully removed totally from the new Act. Maybe cosmetic, but it flushes out a few thousand or lakh words. 5, more than 1,200 provisions and 900 explanations removed, with a simplified content placed as per subsections or classes. So that explanation, what is the difference between explanation and proviso, all this confusion will know. You will not be wasting your time. Everything is given a status of a subsection. 6, additional interpretation. This is something very new. Additional interpretation section has been added to 12 chapters for cluster specific provisions. This is in addition to the general definition clause under section 2. How to interpret, rather than coming to court and reaching this destination of Supreme Court for 10 long years, waiting and then trying to get the matter decided. We thought you will still contest, we will still contest. That's a different story. That's our job. But at least to minimize it, we have brought wherever required in 12 out of the 23 chapters, there are chapter-wise interpretational definitions, which is a new insertion. And more importantly, this act carries 57 tables compared to 18 tables to do away with excessive wordings and enhancing readability. This is the overall general view. Now, what does it propose to achieve? 1, use simple language and remove redundant provisions. 2, this is a new angle. Use formulas wherever required to avoid interpretation issues. We have added close to 46 formulas in this new act, instead of leaving it to interpretation, long drawn interpretation before the courts. Just the formula. You can only now challenge the formula to be valid or invalid. Otherwise, the formula will operate. And any ambiguity in the formula, if it is so apparent, then we can always seek a clarification. A board circular at 119 may resolve the issue. So formulas is one. Then we have maintained one aspect very clearly in the GTC. Ruling of the Supreme Court on key matters have been brought into the Act, not only showing reverence and respect to the judgment, to show that the alignment of the executive with the Supreme Court rulings and its acceptability by the lawmaker. This is something which we have achieved in this new tax code. Now, there are a lot of things to say. How we have simplified, how it has improved transparency, accountability, incentivizing growth, compliance readiness, and technology. Each one can be dealt in detail. But I would rather take questions another 5-10 minutes. I broadly say, because Prakash wanted me to say a few things on the international taxations, I will say that. See, one aspect which we want to make it clear is, as far as GAR is concerned, whatever was in the Income Tax Act 1961 has been bodily lifted and placed in the new act in terms of the terminology, in terms of the expression, in terms of the contours. There is no big significant nuancing of GAR under the new regime. It's the old act which came into effect, say, from 2017 assessment year is being now. But the number of cases which possibly could have been examined under the old act may be far less. So the new regime, even though it carries the old legacy, will be now slowly becoming the testing point. And already, to our knowledge, 4 important matters have emerged so far in the courts. And grace of God and the trust the government reposes on us, we have been involved in all the 4 matters. One is the Rami Reddy matter from Andhra Pradesh, where the revenue succeeded and the matter is pending in the Supreme Court. The second is the Tiger Global, where the assessee succeeded. Matter has been argued in the Supreme Court and the Supreme Court has reserved orders. Now, 2 cases have now come up, one before the Bombay High Court and one before the Delhi High Court, where the orders passed by the GAR panel is now coming for test. It's coming for challenge. Now, you know the GAR panel is headed by a retired High Court judge and other panel members. And once GAR panel recommends, then it leads to passing of an assessment order by the AO in a particular way. Now, 2 of the cases, one is the Hinduja, which is now pending in Bombay High Court, and another is the Vedanta, which is pending in the Delhi High Court. Hinduja is coming on the 19th Jan, and Vedanta is coming on the 3rd or 4th February before the High Courts. See, matters in all the 4 matters are sub judice, and therefore I don't wish to express any opinion at the moment. But very interesting issues. The court has catalogued a very interesting issues, and we therefore need to unlock it in one way or the other. You all know, under the old Companies Act and the new Companies Act 2013, amalgamations and demergers, all these things requires approval earlier by the High Courts, now by the NCLTs. So, the legal issue that is coming up for consideration, I'm only telling the issue, not the sides. Legal issue is whether the aspect of GAR should be agitated at the NCLT stage before the NCLT, or the Income Tax Act will operate independent of the NCLT proceedings, is one question which the Bombay High Court has now raised. The underlying fact appears to be completely different, which has not been projected so far to the High Court as we examine. But let's keep the cards to our chest and we will reveal it at the appropriate time before the court. Because what has been represented and possibly the order obtained may not necessarily be the factual position as we find. But that's something which we'll do it before the court. At the moment, we don't want to say anything about it. So, but assuming this question is taken up, see, these are all very interesting questions. See, in contrast, if you read the Competition Act, it compels an approval, a prior approval before it can happen at all. So a merger or a demerger or an amalgamation of a particular threshold, not all thresholds, because they are worried about from the monopoly, from the anti-abuse aspect, anti-market aspect. So those amalgamations or demergers, or as the case may, whatever it is, combinations, etc., requires a statutory process approval before you can even take it up further, without which you cannot do it. Neither the Income Tax Act nor the Companies Act say so when it comes to the application of GAR. So, if you're going to say income tax has to piggyback and argue all its case before NCLT, is something which we need to know, argue before the court, and highlight that whether a constitutional court can design something which is not within the ambit of law is one question which we will try to pursue before the court. This is one interesting issue which is coming under the lens of the court. And so is the case with Vedanta, where interestingly, both the assessee has filed a writ petition against the GAR findings, and the revenue has also filed writ petitions against the GAR findings. So it's very interesting that way. Both of us are before the court. And that's why limitation was fast approaching. And therefore, we wanted pleadings to be completed. We volunteered, both of us volunteered for the stay of the judgment to preserve limitation under 153. And it was a consent stay given by both parties against each other. And matter is now scheduled for 3rd February, and pleading should be hopefully completed by then. And we'll take it up for arguments. But these are all trend-setting judgments. We don't want to delay from our end. And this should not go into the lumber room for years. And because each one will set a trend, and earlier the better the resolution happens. So we are quite interested to move the matters as quickly as is possible and fight. Now, the cardinal rules under the new DTC is also the same. When it comes to the domestic law vis-a-vis treaty will override the domestic law. But between a treaty and a GAR provision, GAR will override. It's a statutory embedment. And don't think this law is so harsh, so disproportionate, all that. We did a fairly detailed, the Bombay Commissionerate team did a wonderful research in this regard. We compared 42 legislations across the world. And GAR is always a override over treaties. Otherwise, anti-abuse can never stop. We're going to subject GAR also as part of treaty or below treaty, or giving overriding power to the treaty. So that's a very it's a overarching legislation with intended purpose, because it's an anti-abuse. Because see, this is something very interesting. Why is it happening like that? You should understand, because you're going to evolve it under the new law. Anti-abuse is always traceable to the sovereign power of a sovereign nation. You can't part it through a treaty arrangement. No country is ready to do that. If you allow anti-abuse to be a part of a contractual ceremony, then you are parting away your sovereign rights. Now, when nations are slowly becoming multipolar and globalization is becoming re-globalization slowly, it's all the more important we keep our sovereign rights intact. And that is why GAR overrides treaty, and GAR overrides the Income Tax Act, and GAR is supreme. Otherwise, you can never implement GAR in your life. So it stems from the doctrinal principle of sovereignty claims. This is how nations have said before their courts and obtained judgments. We have judicial precedents to support what we say, because we have said this and argued this all and kept it before the court in the Tiger Global matter, which is reserved by the Honorable Supreme Court. So this is a very important angle from a treaty abuse. And of course, the much talked, will LOB override GAR? It can't. It won't. How do you position LOB along with GAR is a very interesting, qua the treaty is a very interesting development. And many countries have experimented on it, and we have also experimenting it, and we have taken our own positions. Even in Tiger Global, we have pitched our points in this regard. So You can't say because of a LOB clause, treaty will override the entire GAR. Because the scope of an LOB clause will be limited to certain incentives and concessions qua the parties, qua the nations. And to use that to brush aside and exhume or extinguish the entire GAR mechanism between those transactions between those two countries is too far-fetched. It just won't operate at all. Therefore, the scope of LOB is different from the scope of GAR. And how do you align is an interesting legal journey which we will have to experiment with few cases in the courts. We have our positions, but because we have taken our position also, but because matter is sub judice, it will not be appropriate to discuss it at the moment in this forum. But to say that LOB will subsume GAR is an impossibility. The entire world has not thought so. And people have argued to the contrary in the respective nation before their respective statutory courts or constitutional courts. So this should be remembered in mind before pitching that far and that high. So now you have the recent Hayat judgment by the Supreme Court, and you have the recent Colorcon judgment on something which is in favor of the SSC. So these are all nuanced developments. That is, Hayat is a very, very nuanced judgment. It's more than a virtual PE. It talks about operating through the minds and discretion and decision-making power of the people with whom you have contracted. That is what we argued very, very clearly in Hayat. You can sit anywhere in any part of the world. Through the contract, what is your controlling power? If you control the operations, sitting anywhere, can you still say that you are not a PE? So this is an evolving area, and one trend-setting judgment in Hayat has already come into force and has given us clear indicators as to how to take it forward, how to take this aspect forward, even under the new law. So the promised 40 minutes is now over. So I'm ready to take, we can go on. There are a lot of things to speak, but it's better we break now here and take some questions. And if I have answers now and the ability to answer, I will try to answer them. If I don't have the answers, then I'll take the questions and see whether I answer it through email to you or I answer it in the court of law. If it's going to be that important question, give us that liberty.
Yeah.
These words, and extremely thankful to Prakash. He's been meeting me quite often in the court and prompting me to do. Okay, I also thought it's a long time since we connected with all of you. So it's always a pleasure to talk to all of you, because every time, all these years, we have learned only from all of you, and we continue to learn from all of you. Yeah. Therefore, we thought we'll continue the journey of talking one more time with all of you with these words. Thanks once again, Prakash, for this kind opportunity. Thanks for the Chamber of Tax Consultants. Thanks for Nega. Thanks, Saurabh, Ashok, Harpreet, Deepesh, every one of you. Namaste, pranams.
Sir, there are a few questions, sir.
Yes.
The first question that I have received through the WhatsApp here, I have not received, I'm just telling right now here. What is your thought process on the issue of the sky high judgment from the Bombay ITA, wherein it has been said that the MLI will not be applicable due to not having the notification issued by the government here?
We are now approaching the Supreme Court and High Court, and we respectfully feel that the Nestle judgment has been wrongly perceived and understood by the tribunal. This is our view at the moment. And we will be taking it and fighting it out quite vigorously. The purpose of an MLI and the purpose of a treaty and the purpose of a notification qua the treaty and the purpose for an MLA, which is an alignment agreement, are two distinct different setup and background. And therefore, to say you apply this also there directly does not gel well within the scheme of the things. and this needs to be contested. In our opinion, it's not a right law. Yes. Any questions?
Yeah, there are many questions. I will read these questions here before this was here. Another question which is I just received here: what is the government thought process on the uh, equalization levy? Whether this equalization levy will come again, or because right now the pillar one is not coming into the scene here. Whether this government is thinking to bring the equalization levy, or it will be gone because the government withdrawn the equalization levy, and there was a condition in the equalization levy that whatever the equalization levy that will be collected, that will be paid subsequently when the law will come. But we do not see that equalization levy coming. And right now the SCP is also a paper tiger only, sir.
So I am nobody to say whether it will come or it will not come. Because I'm not the finance minister, okay? I'm an ordinary law officer of the country. So don't have the power to say this or that. But as a law officer, this question can be addressed this way. Will it be legal to bring back equalization levy? It will be legal. Will it be appropriate to bring the equalization levy? That is a policy call which the policymaker has to take. So if the policymaker finds it appropriate to restore it, to create a balance, see, ultimately now one thing is very clear: tax policies are no longer trade centric. Tax policies are now part of the geopolitical affairs. So trade talks, trade agreements, everything now is getting escalated to a geopolitical scenario. Therefore, if geopolitical compulsions demand its restoration, it will be restored. If geopolitical compulsions do not demand, it may not be coming. So it is decision making now interlinked to so many other contingent factors. That much we can certainly answer to this question. Yes.
Just one. May I request Saurabh Bhattacharya to read the questions here, because the questions that is there in the group. Yeah. Q&A, there is some questions. Mr. Hardeep Chawla has raised some questions here. And after that, Mr. Sudarshan has raised some questions. Please, Saurabh Bhattacharya, sir. You please, you are mute, sir. Saurabh Bhattacharya, you are mute.
Yeah, sorry. Hardeep Chawla has the question: would the Income Tax Act 1961 or the Income Tax Act 2025 be amended by the Finance Act on February 1st? Or would there be lesser annual amendments under the new act?
See, second question is easy to answer. Lesser or more depends on how you deal it and how we deal it. And how courts deal it, more importantly. Because now the interpretative range is very, very personal perceptions by courts. They're getting it more and more into that era. So, as everybody says, same issue can be interpreted by two different courts within the same court campus, two different way. So this much of independence and discretion has now come into to the framework of judicial pronouncements. So we'll have to wait and see. We'll have to just wait and see, and which way it will go. But as far as the first question is concerned, both acts cannot coexist. You can't have two operating acts. So one will be given a burial, which will always be the old act. And whatever transition provisions needs to be done, whatever saving clauses needs to be saved under the old. See, when you said bury, you can't start a new act from 1st April and say the old act has gone for forever. In which case, all your pending cases will all go. So there will be saving clauses. There will be enough insulations and protections, transition clauses. All this will come into place. And the new law will come and the old law will get defaced. This is how it will happen in the normal course. Yes.
Okay. The next question is from Mr. Sudarshan. To what extent does the new reform signal a fundamental shift in the administrative philosophy of income tax enforcement, particularly in moving away from revenue target driven approaches and towards a framework that prioritizes tax certainty, consistency, and taxpayer trust as core policy objectives?
See, one thing is now clear. Any high-handedness by anybody, courts are not taking it lightly, irrespective of what the stakes are. The reason being, a lot of young judges have joined judiciary across the country. And to them, it's not monetary impact or these things don't influence them at all. Even thousands of crores, they don't care. If if they feel the approach is high-handed. Okay. So, but at the same time, when an officer issues a notice which happens to have a larger impact, if assessees also come to the court and keep saying it's so huge and therefore it is a harassment or high-handed, that also doesn't sell in court. It's both ways. Because we don't allow that to sell. Therefore, high-handedness has to stop, and courts are now interfering at the threshold stages itself. It's a clear signal. And at a policy level, let me make it very clear, assure this one more time through this forum. High-pitched matters, when it comes to court, we also deliberate internally. And if we feel that the stand taken by us is wrong, at least in matters where I'm involved, the government is very, very trade friendly at a governmental level, at a policy level. Have no doubts about it. We have gone and withdrawn several notices and several proceedings, high-pitched proceedings, if we perceive it to be incorrect by our officers. But let me also to the counter theory. Some of the high-pitched matters, the assessees or their consultants used media to blow it out of proportion. There was one such matter where it's so high, it was blown out of proportion, that we had to convene a meeting at the North Block, the then North Block, not the new Kartavya Marg. Now, 50 minutes, including the finance minister, has to listen to all the stories. And we said what this business entity is doing through the media is unfair. It's a proper investigation and a proper notice, and therefore we should fight it. And we are standing up and fighting those cases. So, big matters do come, if it comes to our attention, we do deliberate it very, very sincerely. And if we are wrong, we try to come back and say we are wrong, and we don't waste the court's time. If we are right, whatever you may try, we'll stand up and fight. That's very clear. This is one approach we have been following, at least in cases where I'm involved. I can say this. And government wants to be very, very user-friendly. It doesn't want harassment. If notices comes, that's why we take a call at this level. Yes.
There is another question. As
Now, Mayank is asking some question. Do you have any? Mayank's question is with you. Mayank
yes,
is a very
his
good.
question. Yes. I'll just read that.
Oh.
His query is that if provisions and explanations were considered as creating unnecessary confusion, and if that is the main reason for their complete elimination in the new code, New Income Tax Act 2025, then why these statutory legislative devices are still continuing in other acts like the newly enacted 4 labor codes, the new securities code, and the BNSS acts?
Mayank, let's worry about Income Tax Act. You are good and fortunate. You got the benefit under the Income Tax Act. Enjoy. It is not the same people who have written all the 4 laws, Mayank. Yeah.
So
Prakash,
Thank
Saurabh,
you.
you
This basically
yeah, yeah.
answer most of the questions. Mr. Srivastava had a question which is of the same nature as
Mhm,
uh, the
and
one which
okay.
Sir answered prior to this.
mhm, mhm.
So I logged 60 minutes before, so 60 minutes is over. So we can close the meeting
Yes.
5 minutes again. No
Yeah, yeah,
problem.
yeah. Uh-huh. So, Mr. Saurabh, there is some question in the chat box also. Just read one or two question before we take just one or two question here.
Mm,
Mr. Srivastava has written, sir, many issues in the tax litigation arise on account of inefficient act of the tax administrator. Is there any provision in the 2025 Act to check such actions here?
Yeah, how can you pass one section? All officers should be efficient here. What is all this? How do we do all that? All officers are deemed to be efficient.
Mhm,
And if they're inefficient, you after all rush to court and course corrects it. So,
mhm. Mr.
see,
Dipesh sir, can you just uh, extend the vote of thanks, sir?
ah,
Dipesh ji,
Yeah,
sir.
yeah.
Hmm,
Thank you, Prakash.
yeah. Please,
Uh,
please open your camera, sir.
I already started.
Okay, sir.
Yeah.
you're open.
Thank you very much, sir. Good evening to everyone. Sir, it is my very distinct honor and privilege to propose this vote of thanks as we conclude this inaugural lecture on this subject of paramount importance, the comparison between, the two acts, old and the new. The Chamber of Tax Consultants, Study Circle and Study Group Committee, Delhi chapter of the Chamber of Tax Consultant, and on behalf of the entire professional fraternity, I extend a very hearty and sincere word of thanks to our esteemed speaker, Sri N. Venkatraman Sir, the Additional Solicitor General of India. Sir, we are profoundly grateful that you took valuable time out of your extremely busy schedule to grace this event and share your unparalleled insights with us, sir. Your address was not merely lecture, but masterclass shedding light on the structural and philosophical shifts on the direct tax laws of India. The way you articulated the challenges and nuances and as many forward-thinking aspects of the proposed legislation, especially in comparison to the settled jurisprudence of the 1961 Act, has truly enlightened us, sir. I now request everyone to please join me in proposing a very well-deserved vote of thanks to ASG Sri and Venkatraman sir. Thank you very much, sir.
Just give me only 10 seconds. I'm just now seeing V. Sridharan sir being as one of the. I'm so thankful to you, Sridharan sir. A personal thanks to you.
Such a wonderful lecture it was.
I'm
So
thrilled.
enlightening it was. Okay.
So thrilled.
Phenomenal. Mm. That's the reason why you are where you are.
Oh,
Sir,
thank you.
very nice. Very beautifully put.
It means a lot to me, sir. Thank you.
No, I'm grateful to you, sir. Very good. Thank you.
Thank you all of you. Thank you all of you.
Yeah, thank you, sir.
Pronounced to you.
Thank you
Can I
very
exit the
Sir,
Yeah, please,
as per
please.
you, yeah,
Yeah.
as per your wish, sir.
No.
Now the Venkatraman sir and Sridharan sir both are the Guru brothers, both are sisi of a same teacher here. So we will
Oh, yeah,
have the learning. Both are the teacher, both are the student of same teacher. So we will have the
Mine
learning.
is physical PE, he is virtual PE.
Virtual is Maya, he says.
No,
What
therefore
he
it was
says
more
is
intense.
real PE and virtual is Maya. मुंह माया बोलते हैं हिंदी में.
Thank you.
Namaskar,
Pranam,
sir.
sir. Namaskar. Thank you so much.
Thank you, sir. Thank you. Now, may I request Dipesh Bohra sahab to just give a welcome address to Sridharan sir, sir.
I have now one more privilege to welcome our Sridharan sir and
I am with
privilege.
my colleague Dinesh Kukereja. He has done all the work. Okay. He's
Welcome,
also
sir. Welcome, Dinesh. So, Sridharan sir requires no introduction, but as a matter of formality, I have to, I will introduce, I will, give a formal introduction. Sridharan sir is a designated senior advocate with over 4 decades of experience at the bar. He is widely recognized as one of India's most respected legal minds in the field of taxation and commercial law. A chartered accountant, cost accountant, and lawyer by qualification. He began his legal practice in 1983. He was one of the co-founders of Lakshmi Kumaran and Sridharan Attorneys, which went on to become a prominent law firm with a strong national presence. His practice spans broad range of subjects including indirect taxes, GST, customs, excise, service tax, income tax, and general commercial and civil law. Mr. Sridharan has appeared in several high-stake matters involving complex questions of statutory interpretation, constitutional law, and contractual disputes. He was recently instrumental in shaping GST law through his involvement in several major industry-wide disputes. Known for his in-depth approach and clear articulation, he regularly appears before the Supreme Court, High Courts, and appellate tribunals. His approach to law is marked by a strong academic foundation and a comparative outlook. He has extensively studied not only Indian tax laws but also international GST frameworks, income tax principles, and core areas of civil and commercial law. He is a regular speaker at professional forums and legal institutions and continues to be a source of guidance and inspiration for lawyers across the country. And we are very privileged to have him on the day of first day of this series on the comparison of ITA 1961 versus 2025. Without taking much of the time, I would now request Sridharan sir to address the audience. Over to you, sir.
Prakash bhai, ijazat hai?
Yes, sir. Your blessing, sir. Your blessing, sir.
I am with my colleague Dinesh Kukaraja. He has done the entire slides, etc. Okay. And hope they will share it. We'll share it. You can also share it, no? I was asked by Mr. Prakash Sinha to deal with 3-4 topics. I requested his permission that I'll confine myself to one topic. Okay. He wanted me to talk about tax year, repeal and saving. He also want to talk about notwithstanding and without prejudice, etc. I said I will take some time in this tax year itself. My first request to you is most of what I'm going to tell will be of not serious practical relevance. It will not be practical relevant as of today. Okay. When some problem will arise, I do not know. Okay. So it's always better to have a background to this. Okay. If any of our participants think that with this I'm not able to solve this pending opinion, I'm not able to give this advice to the client today, then my humble request is this is not the focus of this discussion. Okay. Some of it will be largely theoretical, but my request is because we want a strong basis on this. And in one sentence, we will say, Dinesh in fact told me, sir, except for change in nomenclature, there is nothing of real substance in this. He is right in this. There is no, except for using the word tax year instead of previous year, there is no substantial difference. But there are certain finer points which may be relevant later. Okay. So that's the whole basis on which we are discussing this. Now, we want to deal with the history of this previous year, assessment year, etc. Okay. And as I said, everything is done by Dinesh. He has coached me. I'm only reflecting what he told me. And Dinesh, you want to speak at any stage, please don't hesitate. Okay. I am taking the 1918 Act. People may say, sir, we are in 2025. Venkatraman sir, ASG has said what's the future, etc. Very correct. But we need to know the past also a little bit. Okay. So why I'm talking 1918 Act is, that's an act which levied tax on the income of the assessment year in the assessment year. I repeat, in 1918 Act, income of the assessment year was taxed in the assessment year itself. They used to assess provisionally and then adjust later finally. So this concept of previous year and assessment year came in 1922, was retained in 1961. It is now in 2025, it is not there. Okay. Therefore, I am looking at 1918 Act. The term assessment year was not used, not defined in the Act. Levy of tax on the income of the previous year, I am using the term previous year loosely, the same year itself. Rates of tax is to mention the schedule to the Act. It is not used with the Finance Act. It is like our Central Excise Act or Customs Act is mentioned the rate in the schedule. So Income Tax Act 1918, rates are mentioned in the schedule itself. The tax term previous year was defined, and section 14, procedure for assessment, assess provisionally, adjust later. So what you have to know is income of the previous year is assessed in the same year. So if you earn 10,000 rupees during April 18 to March 19, and rate of tax will be 10%, that will be applied automatically. That's what the 1918 Act is, correct? Go to the next one. In the 1922 Act, term assessment year is used, but not formally defined. These slides are for CTC, sir. Similar slides are used in giving a presentation to Madras Tax Bar. Okay, this is similar to that. Okay, so this is for CTC for you to share wherever you want. We have no problem on that. Okay, so term assessment year was not defined in the Act. Term previous year was defined in the 1922 Act, similar to 1918 Act. Okay. But next line is important. Tax is the assessment year, but subject matter of tax is income of the previous year. This sentence all of us are familiar, but when we deal with examples a little later, this becomes very clear. The Finance Act 1964 specifies the rate of tax of 10%. In the government parlance, it's a tax of the year 64-65. I repeat, if Finance Act 1964 specifies the rate of tax of 10%, it's a tax for the year 64-65 in the government books. If you have to audit the government's books, so this tax will be of 64-65. But the 10% is levied on the income of the previous year, that is 63-64. So base will be the income, but legally the tax will be tax of the assessment year. In their government accounting, it will be tax of that year. The distribution of the two acts is explained in the judgment of the Calcutta High Court, just a ranking judgment. If somebody wants to read that, you can see that Bihar Lal Malik. Okay, it's a good judgment, but gives the background behind it. Now, the objection is the 1922 Act is important. We can see this. I am clear, Prakash Bhai? We are able to hear me clearly? I am reading it. Under the present Act, tax at the rates fixed for any year is levied on the income of that year. If provisional assessment is first made on the income of the preceding year, the assessment is subsequently adjusted and corrected. The income of the year in which provisional assessment was made ascertained. The system gives to numerous complaints. It involves keeping a running account between government and the taxpayer. Incomes are liable to sudden fluctuations. Taxpayers to pay heavy tax in lean year, the light tax in a prosperous year. The working of the system is not clearly understood by many assessees and given rise to many misapprehensions. Will therefore provide that for tax at the rate sanctioned for any year being assessed finally on the income of the preceding year and for the abolition of adjustment system. So the reason why they introduced in 1922 that tax will be of the current financial year, but base will be the income of the earlier 12 months period. Was this? You immediately ask whether all these problems which were solved in 1922 are we brushing aside and recreating this problem? One of the questions we'll ask in 2025. For example, incomes are liable to sudden fluctuation, taxpayers to pay heavy tax in a lean year and a light tax in a prosperous year. So, will that problem arise now also? According to me, no, but we will see that. Now, the objection reasons are continued. The only exception is contained in clause 26 to guard against plausible loss of revenue. I'm reading it. Going to delay in assessment. This is like a shipping income, discontinued business, etc. Okay, exactly that. This clause 26 in the bill becomes section 25 of the Act, discontinued business. Similar provisions are contained in the 61 Act under 172, 174, etc. They are there in the new Act also. Notes on clauses continue that when you are discontinued, you must issue notice. That's no problem. So now stage is set for 61 Act and then we'll see 25 Act. So I repeat, in 1918 Act, income of the previous year is taxed in the same year. The rate of tax is mentioned in the Income Tax Act itself. It is not in the Finance Act. And provisional assessment and fund adjustment was done later. In 22 Act, scheme was different. Taxes of the assessment year, but income of the previous year. So income earned in 63-64 is 1 lakh. Rate of tax of Finance Act 64 is 10%. 10% was applied on 1 lakh. There was no definition of assessment year in the 22 Act. There was a definition of previous year, which definition was there in 1918 Act also, 1922 Act also, is there in 1961 also. Now, come to 61 Act. Previous is defined in section 3 of the Act. Terms are identical to section 211 of the 22 Act. Assessee can have different income, previous year with different source of income. Lengths of previous year can be different based on religious custom. For example, somebody can have Samvat year, somebody can have Diwali year, sometimes maybe more than 12 months, sometimes less than 12 months. All that is permitted in the 61 Acts introduced. Assessment year is defined in the Income Tax Act 1961 for the first time, but this is only a formal definition because clarificatory, no change. It's a period of 12 months. Okay. Next. The Privy Council judgment, and therefore I am referring to it. All of us are familiar with this. An amendment was made effective from 1st April 1939. It says when the transfer is a revocable transfer, the income will be continued to be assessed at the hands of the transferor. So amendment introduced saying if asset is transferred on revocable basis, income for the transfer of the asset will continue to be taxed at the hands of the transferor. This amendment was introduced April 39. Prior to April 39, once the asset is transferred, even on revocable basis, income for that asset will be taxed at the transferee. In that case, the income in question was for the previous year 1938-39. Okay. The question was, transferor transferred it even much earlier and revocable transfer. So income may belong to the wife. Question is whether to tax under the husband. We are not considering section 64 clubbing. The Privy Council took the view the law applicable is in the first day of the assessment year. Tax is the assessment year. That income which you are computing is of the previous year 38-39 is not relevant. The amendment saying transferor will be liable came into effect 1st April 39. Therefore, even though transfer is made much earlier, an income in question is of 1938-39, the tax will levied at hands of the transferor. This is what the judgment says. We will see little later the reasoning for this. According to me, the reasoning as to, we all know, law applicable the first day of the assessment is relevant. What is the logic? What's the reasoning? Sampath Iyengar's book gives the reasoning beautifully. All Finance Act come into force on 1st April of that year. I repeat, all Finance Act come into force on 1st April of a financial year. Therefore, law applicable the first of the assessment year. I used to think in sales tax, suppose I sell a computer on 15th June. Rate of sales tax on 15th June is 10%. On 20th June, rate of sales on computers increased to 20%. If you make a sale on 20th June, that will attract tax at 20%. 15th June sale of computer will attract tax at 10%. We don't say the sales tax is paid monthly. Whatever is the law on the 1st of that month, 1st of June will govern. We don't say that. Because we are able to identify the individual sale which is liable to tax, rate of tax prevalent on the day the sale is made. But income tax is not a tax on individual transactions. It's a tax on the aggregated affairs for the year as a whole. You might have made profit for first 363 days. And you may make a loss in last 2 days which will wipe out the entire income. It is possible. Income is of that year. Okay. Then, since the income is of the year, but taxes of the assessment year, and Finance Acts always come to for 1st April. Therefore, law applicable the first day of the assessment year is taken. There is no other logic. Because if we relate with sales tax, individual sale, law applicable on the day sale is made. Custom, day on the which import is made. In income tax, the day on which the particular income is earned. That is impossible. Because you'll have series of transactions, you'll have series of expenditure, tax is an aggregate of that. Therefore, 1st April. And Sampath Iyengar's book says beautifully that all Finance Act come into force 1st April. In fact, prior to 1954-55, all the Finance Act used to be approved. All the Finance Act used to be enacted prior to 31st March. Nowadays, we get the Finance Act passed its time to middle of April, middle of May, etc. But even though the President assets it in March, in April or May, it will always say effective from 1st April. Actual come into effect from 1st April. Okay. So that is the reason this Pitampur's case of the Privy Council says so. Please therefore don't link with the day the income is earned. That's what Pitampura. Next case. This is very unfortunate case. Rajasthan became part of India after Indian Constitution came into force from January 1950. Finance Act 1950 extended the act throughout the whole of India. The assessee has earned the income during the period 4950. Question was whether he is liable to pay income tax under the Finance Act 5051. Income has been earned by him when Rajasthan was not part of India. Supreme Court said, no, for income tax purposes, Rajasthan is part of India from 26 January 1950, or any case, it is part of India from 1st April 1950, because Finance Act 1950 extended India to whole of India, income tax act whole of India from 1st April 50. Therefore, that you have earned the income in question from the bank during financial April 4950 is irrelevant to the matter. And therefore, he is made to pay tax. Okay. Next. Here, Burma was part of India. Rajasthan got included. In the Burma example, Burma became part of India from April, ceased to be part of India from April 37. But assessment year 37-38, previous year 36-37. He had made losses in Burma business. Whether he can be set off during the year. Court said yes. Both Madras High Court and Bombay High Court. Here, Burma ceased to be part of India from April 37. Assessment year is 37-38. He had made loss in Burma business for financial 36-37, previous year 36-37. In calculating the income for 36-37, whether loss in Burma should be taken into account. That the High Court said yes. There is no conflict between Madan Lal Kabara's case and this. According to me, if you want to see the facts, okay, then facts prevalent during the previous is relevant. But if you have to ask the question, for example, stay in 182 days, you don't look at the residential status in the assessment year. You look at the residential status in the previous year. If you stayed for less than 180 days during previous year, that is stayed for more than 180 days, the assessment is not relevant. Okay. Go to the next one. This case is a Bombay High Court judgment. I am not able to reconcile this with Madan Lal Kabara's case. Okay. Continental shelf became part of India for income tax purpose from April 83. The foreigner worked in continental shelf and earned income during financial 82-83. Whether he is liable to pay tax for assessment in 83-84. The Bombay High Court said no. They referred to Madan Lal Kabara and distinguished it. Okay. This case is a little peculiar. Those days, you are treated as a resident of India if more than 50% of income was earned from India. There are a number of countries which have that. The source of income from India is more than 50% of total income. In that year, you treated as a resident of India, not based on number of years of stay. UK company had income from India which is more than 50%. Whether resident of India or not was the question. Privy Council said fact as to whether he has derived more than 50% income should be deemed for the previous year. Because residential status will be based on the fact during the previous year. That's what Wallace Brothers case say. Okay. Why I am saying all this? There's a background to this. That's the reason. Okay. So now I'm going to a very, very important example and topic.
Yes, sir.
What I said is a slightly different background. In 1967, government took a policy decision. There is no change in the act or the rules or notifications. Income Tax Act 1961 continued to be the same, practically same for the present context, both pre-67 and post-67. I repeat, for the present controversy, previous year assessment year, rate of tax, etc., there is no change in the Income Tax Act as such between pre-1967 and post-1967. No change. The government said, henceforth, any proposal made by the finance minister on or around 28th February 1967, when she speaks in the parliament, minister stands up on 28th February 1967 and she says, I'm going to increase the tax rate from 30% to 40%. She says so, he or she says on 20th February 1967. When you look at the Finance Act, this will figure in part 3 of the first schedule. I will explain that. Or for example, the finance minister says, I'm going to give exemption for interest on government deposits. That's the proposal announced by the finance minister on 28th February 1967. When you look at the Finance Act 1967, it will say, effective from 1st April 1968, interest from government securities are exempt. I repeat, Minister stands in the House on 20th February 1967. Sir, honorable members, I'm going to exempt central government securities, income from central government from income tax. When you open the Finance Act 67, it will say, so on the section, amendment effective from 1st April 68, income from central government securities exempted. That's the decision from 1967 onwards. Prior to 1967, suppose the same point is arising in Finance Act 66. When the finance minister stands up on 20th February 1966 and says, I'm going to grant exemption for interest on central government securities. If you open the Finance Act 66, it will say income from central government securities are exempt from income tax. It will not say effective from April 66, April 67. It will not say so. Why I am asking all this is, I am going to put a question to the audience. When Finance Act 2026 is enacted by the Parliament, by the Finance Minister, what will be the shape of that? Will it, suppose any amendment is supposed to be made in Finance Act 26, will it say effective April 26? Will it say April 27? What will first schedule to Finance Act 2026 will look like? So this is the background for that. In other words, prior to 1967, whatever minister speaks in the House in the budget of that year will be reflected in the Finance Act of that year and effective from 1st April of that year. From 1967, there was no change in the law. Government, as a matter of policy, to make administrative convenience, said whatever I announce will be effective for income to be earned from April 67. Earlier, whatever she announced February 66 will apply for income earned between April 65 to March 66. From 67 onwards, whatever announcement she makes will not apply for income from April 66 to March 67. It will apply for income from April 67. That's why we say prospective. This is a change in policy, not change in the law. They will say, henceforth, we will introduce amendments in this manner. Now look at it. Just 1 minute. Huh?
No, sir.
சார் ஒரு வெபினார்ல இருக்கேன் நானு முடிச்சுட்டு போன் பண்ணேன். ஓகே. Audible, sir, now?
Yes, sir. Yes, sir. Audible, sir.
Prior to Finance Act 67, all the financials are 2 parts in the first schedule, not 3 parts, only 2 parts. Part 1, Part 2, Part 3 nahi hota tha. I'm going to ask you, the audience, post 2026, whether the Finance Act will have 3 parts or 2 parts. That's the question I will going to ask you. I'm also going to ask you, when the minister announces change, will the Finance Act say effective from April 26, 2026, or will it say April 27? These are the 2 points we're going to ask. That's the background for this. Okay. Go back. First part will say normal tax for assessment year, and part 2 is TDS for income other than salaries. Okay. Because whatever announcement is made by the minister is effective in that budget, in that Finance Act itself. Okay. For example, Section 223 of Finance Act 63 In subsection 2, the words in a district shall be and shall deemed always to be omitted. It will not say effective from April 64. Prior to 1967, there will be nothing in any of the clauses. This amendment will effective from 1st April 64. 63 के budget बात कर रहे हैं, कुछ नहीं बोलेगा. This from 1st April 64. It will simply say this change, etc. From 1967 onwards, they started this. Go back now. Go back next one. With the effect from budget proposal 1967, a policy was introduced. Changed tax was to be effective from assessment 68-69, not immediately 67-68. Policy change is required to over two sets of tax calculation for TDS and salaries and advance tax and regular assessment. Therefore, first schedule since then consists of three parts. First part, normal rate of income tax for the upcoming current year, that is 67-68. TDS rate for other salaries, and TDS rate of income for salaries, advance tax income from discontinued business. This will be there in part 3 of the first schedule 67. Part 3 of the 67-68 will become part 1 of the next year automatically. So rates of advance tax and TDS mentioned in part 3 of the first schedule of the Finance Act will become part 1 of the succeeding finance, so that there is no retrospectivity in that change. That's how it is announced. And this is explained in para 11 and 12 of 1967 circular. Why I am giving all this is, Prakash Bhai can say, why are you wasting time on all this? The reason is, when you want to look at Finance Act 26, how it will look. Too boring, Prakash Bhai?
No, sir, very important concepts that we are learning here, sir.
No problem.
We have never thought that what type of the brain that was behind, what was the history that was there prior to 67-68. And in fact, when this concept of the what was the concept of the 1918 Act, what was the concept in 1922 Act here? Because you have mentioned that in 1922 Act, there was only previous year, but tax in the assessment year. So the income of the previous was going to be taxed, but assessment year was not defined in 1922 Act here. But 1961 Act, why that assessment year has come into force? This is the very...
There's a definition is there, otherwise no change. Formal definition in 61. There's no other change between 22 and 61.
Yes, sir.
18 and 22 a drastic change. Today, our act is not similar to 18. I want to make that sure also. Okay. Right. Next. Now, Dinesh, you will explain this. This simply to repeat the point we have dealt with. Okay. But this is just to complete the picture so that there's no mistake in our act. Read it, Dinesh.
So,
read it.
The tax rates prescribed by the Finance Act. Finance Act 1964 prescribes tax rate of 10% for upcoming assessment year 1964-65. Similarly, Finance Act 1965 prescribes tax rate of 15% for AY 1965 and 66. And there used to be only two parts before 1967. So therefore, these rates were mentioned in part 1 of the schedule 1 in both the cases.
These are hypothetical, not the rates. We are not checking.
These are just examples. Finance Act 1968 prescribes tax rate of 20% for AYs 1968-69 in part 1 of schedule 1, and tax rate of 25% for AY 1969-70 in part 3 of schedule 1. Part 3 would be relating to advance tax, TDS on salaries and discontinued business, etc. Finance Act 1969 prescribes the tax rate of 25% for AY 1969-70 in part 1 of schedule 1.
A clear example. 10, 15, 20, 25. First 2 years, 64, 65 is in part 1 of first schedule. In 68, it became 20% for schedule 1. And schedule part 3 may be 25%. And Finance Act 29, part 3 of the earlier year became part of the next year.
So the concept of part 3 came from the assessment year 68-69, sir.
Absolutely correct. Absolutely correct.
Okay, sir.
Okay. Yeah.
So income earned in previous year, what will be the tax payable based on the hypothetical rates which we took in the case study in the earlier slide? For previous year 1963-64, income earned 5 lakh rupees. The relevant assessment year would be 1964-65. The rate of tax would be as prescribed by the Finance Act 1964, which would be 10%. So the tax payable would be 50,000. Next year, 1964-65, the relevant assessment year would be 65-66, in which again the rate of 10%, rate of 15% is there, and therefore the tax payable would be 1,05,000.
The typing mistake, rate
Yeah.
10 नहीं है 15 होना चाहिए. Okay.
Then in 1968-69, the assessment year would be 69-70, and here the third part of rate of 25% would apply, and the tax would be 20% of the income.
Of this year, and advance tax will be this.
Correct.
Oh.
Correct.
Next paragraph. This is simple. Finance Act 89 onwards, all of us know. Uniform previous year is there. In case of new business, it says from the beginning of the business to the end of the financial year. In case of new source of income, date of inception of source to the end of the financial year. These point 2 and 3 above are there right from 1922. Okay. According to me, these 2 points need not be there in the section. It is there even in the current section 3 of the new act also, 2026 act also. It is not necessary. Pre-1989, they had a relevance and role. Pre-1989, the section said, if you start your business in October, say 2019, your previous year can end up to 31st March. I'll take an example, sorry. You started business in October 79, your previous 1979, your previous year can be up to March 80, or it can be up to October 80, according to your choice. Okay. So, if I repeat, you start your business in October 1979, 1 year ends in October 80, your first previous year can be from October 1979 to October 1980, or at your choice, or it can be from October 79 to March 80. When uniform previous year concept came, and every previous year ends on 31st March 1980, 31st March of the year, these provisions are unnecessary. So this provision is unnecessary even in the new act. But sometimes legislature puts it on abundant caution. Why I am saying this is, I came across some cases, officers saying, your business is set up during the year, expense incurred prior to that, I will not allow. It is not part of business, I will disallow. So you have to say, sir, you are wrong. This provision is unnecessary. Okay. It had a role and meaning pre-1989. It is incorrectly retained in the Act post-1989. And in any case, the officer's assumption that business is set up when the first sale is made is incorrect. That is the point we have to read, because this proviso is there in the current section also. I have come across cases where based on the proviso, in the first year some losses are being disallowed. Okay, no difficulty. Now let's come to now the current act. Everything is the same. The word previous year, instead of that, they use the word tax year. Tax year means 12 months of the financial commencing from 1st April. Now 3.2. Same. Date of setting of the business or date when source comes into existence and ending within the financial year. This is similar to our proviso to previous year in the existing section. So 3.2 in the new section and 3.1. 3.1 is word to word identical, except the word used earlier was previous year. Now it uses tax year. No other change. This is just to complete the picture. In that case, the business was nationalized in October 1956, middle of the financial year. The assessee argued, I didn't have business for 12 months. Therefore, I'm not taxable between April to October also. Supreme Court rejected it. Said whatever you want up to nationalization can be taxed. That you are not operated for full 12 months is irrelevant. Therefore, I say in view of this judgment of the Supreme Court, proviso to section 3 as stood post 1989 is irrelevant, unnecessary. Similarly, 3(2) of the new act also is unnecessary. We know section 4 of the 1961 Act. Central and shall be charged for any assessment year at any rate, income tax rate shall be charged for that year. So, but it says in respect of the total of the previous year. So 4(1) says where the Finance Act says income tax shall be charged in accordance with the provisions of the Act, it will be taxed in respect of the income of the previous year. Okay. So in the 1961 Act, all of us know it, nothing profound. Income of the previous year, but the tax is charged in law. In law is the tax of the assessment year. Okay. The new act also is identical. Income tax shall for any tax year at the rate or rate at the taxation which are at the rate specified according to the provisions of this act. So 4 of the 25 Act also is the same. Sir, when the income tax of 1922 was made, replacing 1918 Act, the detailed double transitional provisions contained in section 25(3) and 25(4) of the 1922 Act to avoid double taxation. In 1922, when 19 Act died and 22 Act came, so section 25(3) and 25(4) were enacted in the 22 Act to avoid double taxation. The question to Prakash Shanna and his very learned audience is, there is no transitional provision in the Income Tax Act 2025. Is it needed? No को डाला भाई. No नहीं डालना चाहिए था. Audience को could have kept it on the tender hooks. No transitional provisions to prevent so-called double taxation. Not needed also. We will deal with that. Okay. So this is taken by this paraphrasing is by AI. Okay. Dinesh had taken it out from that. I asked him to ask a question. He asked the AI and it gave an answer. I don't know whether AI is mentioned. I couldn't hear that fully. I was told once the first draft of the Income Tax Act was made by the AI. Prakash bhai?
Yes, sir.
आपने कभी सुना? I was told a command was given.
Yes.
Saying all the sections which have been omitted, etc., delete that. 2, wherever notwithstanding is there, put irrespective of. Okay. And take a print. Okay. So, pura act aaya. First draft is AI only. Okay. Word to word. That is correct also. That's that's why the government functions also. The minister will tell the parliament that no substantial changes is made. I am only redrafting the act for lucidity. So that's what she tells the parliament. Therefore, she will tell the bureaucrats, please obey what I told the parliament. So I'm not saying wrong. So Babus cannot deviate from it one line.
Agree, sir.
That's how it is. That's how the democracy functions.
Yes, sir.
Okay. So minister's assurance to this, file will put up saying no substantive taxes are being levied. Same thing is being continued. Okay. Therefore, AI prepared the draft accordingly. Nothing wrong in that. Okay. So that is why when somebody asked to speak on repeal and saving, I said there is no difference in the old act and new act. There is no need for repeal and saving. We'll deal with that later. Okay. Now, up to March 26, you will be governed with the old regime. Income earned in financial 25-26 is governed by income tax 1961. Income assessed in 26-27. Status, assessment year level will be used one last time to close the books on income earned after March 26. Okay. Then, from April 26, income earned in 26-27 is governed by Income Tax Act 2025. Income is assessed in tax year 26-27. So, for the year April 26, March 27, you are not paying tax twice. You paid income on the year 25-26. Suppose there is no advance tax, there is no self-assessment tax. Let us assume there is no advance tax, there is no self-assessment tax. Income earned in 25-26, you will officially pay during assessment year 26-27 under the old act. Then income earned between 26-27, you will again pay tax under 26-27 as tax year. Therefore, income of the respective years is taxed only once. Only thing is, for 26-27, you have two hundis. One called assessment year 26-27, another called tax year 26-27. There is no double taxation. It's not the same income is taxed twice. Therefore, we believe.
Kindly clarify, sir, because our understanding that for the financial year 25-26, we will be paying the tax in 26-27 as per the pre-existing act itself here.
But actually speaking,
Yes,
Finance Act 26 will have one column saying, as far as assessment year 26-27, rate of tax will be this. Part 1 of Finance Act 26-27 will say, rate of income tax for assessment year 26-27 will be the same as Part 3 of Finance Act 25. As a hona chahiye. In other words, that's what the question we're going to ask. What will be the shape of the Finance Act? So,
yes,
Part 1 of First Schedule of Finance Act 26-27 will use the term assessment year. Will not use the term tax year. There will be another part saying for tax year 26-27, rate of tax will be this. Okay, that's my guess. I may be wrong, but my guess is Finance Act 26-27, in order to levy tax for assessment year 26-27 for financial year 25-26, will continue to use the term assessment year one more time. There will be a term called assessment year 26-27. Qua previous year 25-26. There will, in addition, for 26-27, there will be a concept called tax year, that is taxing the income of financial year 26-27. This is my guess. I want audience to comment and correct me if I am wrong. In other words, to assume the term assessment year will not figure in first schedule of part 1 of first schedule of Finance Act 26 may be inaccurate. It will have tax year 26-27 accurate and assessment year 26-27 rate. Assessment year 26-27 will be as per this. That's my guess. What do you say? Otherwise, whatever advance tax you paid during 25-26 cannot be regularized, cannot be adjusted. That's my guess. Okay.
So, sir, there will be for the tax year 26-27, there will be rate for the advance tax, rate for the TDS here.
Oh, that's the question. Next. Again. So, when the finance minister presents the Finance Act, Finance Bill of 2026, this is the queries I am having. What will be the possible structure of first schedule of Finance Act 2026? How will the finance minister announce the budget of speech at 26-27? Will she say Finance Act 20, like amendment correct? Suppose they say they want introduce an amendment in the Income Tax Act 2025, granting exemption to central government securities, income from central government securities. Will the minister say effective from 1st April 27? Or will she say effective 1st April 26? In other words, forget about the rate for a minute. I'm jumping to slightly different point. any amendment is announced during the budget speech, when you look at the legal text of the Finance Act, amending the Income Tax Act, will it say effective from assessment year 26, 27, 27, 28, or tax year 26, 27? According to me, no. This will be similar to what was prevailing pre-1967. That's the first point we are discussing. Because the Finance Act will be effective 1st April of that year. Finance Act 26 will be effective 1st April 26. Finance Act 27 will be effective 1st April 27. Any amendment introduced by the Finance Act will not have additional clause like this. This amendment will be effective from so and so date next year. Hoga nahi kuch bhi. It will all be on that date itself. That is the first thing. Next question is, will the section 2 of the Finance Act specify rates? Income tax rate for assessment 26-27, TDS rates for 26-27, TDS and salaries, or will it simply, according to us, the part 1, part 2 and part 3 will be also be there, because to take care of TDS things, and income tax, the tax year will be there. Correct? Because without that, or possibly there will be only one part being the rate of tax for the year and TDS rate for the year, advance tax rate for the year. Unless you have special like 10% on royalty, etc. So there may not be 3 parts. There will be only one part. Finance Act 20 may be a little different, but Finance Act 27 onwards, in first schedule, there will be only one part. Because rate of tax for the tax year, TDS rate for the year, everything will be there in that. It will not be 2 different parts. Certainly 3 parts will not be required. This is what our guess is. 3 parts are not required. Last point we want to discuss is, we have section 172, 174, etc. for discontinued business. Income of the previous year, income is assessed in the very year itself. Unlike income of the previous being assessed in the next year. Okay. For shipping income, discontinued business, we have special sections to say will be taxed in that very year. These sections are continuing in the new act also. 316, 317, 318, discontinued business, shipping business, etc. Now that there is no difference between previous year and tax year, etc., are these sections necessary? That's the question. According to me, these sections are necessary because they want to, if they want to assess tax in advance, assess, not advance, assess the income, then these provisions are necessary. Otherwise, since there is no concept of previous year and assessment year, these sections are not necessary in that sense. These are necessary to enable the officer to assess the income in that very year. Because otherwise, Prakashana will say, my due date for the return is 30th of June of next year. How can you assess me before 30th of June of next year?
Yes, yes.
To overcome that, these sections are needed. Not to take care of change in the rate of tax, etc. Okay. That's all. So, this is all I wanted to discuss, sir. Now, any other, now you can, it's open to you for you people to ask questions. Audience can ask, you can ask, whatever it is.
Yes, sir. May I request Saurabh Bhattacharya, sir, to read through the questions that has been raised here.
Put it in the chat box also, we can also read it.
Yes, yes. Right now I'm going through the chat box here. One question that has been raised, sir, how do interpret section 294, that is the Q&A box, okay? Open question by Kunal, this one, Reshamwala. He has
Kunal sir, how are you? Can you unmute him?
Yeah, sure, I will.
how to interpret Section 294 of the 1961 Act when beneficial announcement is made.
What is 294? This is when the Act is not enacted.
Yes.
Mr. Kunal Reshamwala, you have been allowed to speak here. I have unmuted you.
Corresponding section क्या है 290?
Hmm. 294 is the, sir?
Yeah, understand.
Yeah.
Kunal sir,
I have unmuted him, sir. Let him, I feel that he is not able to, he is not near the laptop, so he is not able to listen this,
Okay.
this one.
Okay. Let me explain.
Yeah.
Is how to interpret 294 when beneficial announcement is made. Okay.
Mhm.
This is nothing to do with the current topic. Is like in that sense.
Mhm.
There is a problem in 1 year when the Finance Act was not extended to particular area. Okay. Finance Act used to apply to some territories only when the Finance Act is extended, not Income Tax Act, Finance Act. So the levy failed. There may be cases where the bill is not passed by 1st April. What happens? Okay. Then 294 said, if because the section 4 of the Act says rate will be as per the Finance Act, but the Finance Act is not passed by 1st April, let us assume, then what is the position? Or not passed at all? Then 294 says previous Finance Act will continue. Okay. So 294 only says the old act will continue. But what happens is subsequently when beneficial provision is made, the Finance Act will specifically say this will be effective from 1st April at the beginning of the year. What happens is under 294, old act continues. When the new act comes, it will be effective from 1st April. So once the new act is effective 1st April, it is as if that is in force. I was asked a question by somebody. The TDS and royalties increased from 10% to 25%. Okay. Finance bill had not been passed. I told you initially that prior to 1955, finance bill all used to be passed by 31st March. Okay. Post 55, only delays used to take place last week of April, first week of May, etc. But when they passed also, all Finance Act will say effective on 1st April. So one client asked me, sir, TDS rate has been increased from 10 to 25% with the bill, but the bill has not been assented. I'm making a payment today. मैं 10% दूं, 25% दूं. Okay. Then I told him, in any case, we know this Finance Act is going to be effective 1st April. On the day you make the payment, tax is 10%. The rate is going to be increased to 25%. Don't rely on that engineering research principle, impossibility of compliance, etc. Please pay 25% because it announced the finance bill. So Kunal's point was 294 says if finance bill is not passed, then old act will apply. Okay. And if there is a beneficial provision, what happens? The answer to that is the subsequent Finance Act introducing beneficial provision will say effective on 1st April. So once it is effective on 1st April, 294 will not apply. So please don't mix up the reality that in April of that month, no Finance Act of subsequent was in force. In law, once the finance is enacted, it will be effective from April, and therefore there will be no vacuum in practice. So benevolent reduction in subsequent Finance Act will apply to you. Just as any enhancement also will apply to you.
So, sir, in case the finance bill has not been passed, all the provision of the previous finance bill, previous finance act that will apply here.
Yes, yes.
That will continue to apply here.
But in the subsequent Finance Act doesn't say effective on 1st April.
Yeah.
That's it. So 291 was enacted without considering the fact all Finance Act say it is effective on 1st April. Okay. This is to take care of some Chota Nagpur Plateau or something. There was some district in Bihar in 1930s where notification extension of the finance was not made. Therefore, escape tax. To overcome that, this was introduced. Okay. So one line answer to Kunal sir is subsequent benevolent finance act will always say effective on 1st April. And once it is effective on 1st April, as if 294 is not relevant. Okay. Right.
So, Saurabh sir, can you read the question of Mr. Mayank
Mohanka?
Yes, yes.
Whether the oversimplified approach of converting all existing provisos and explanations which were considered subservient to the main operating section will pose interpretational challenges in coming years, considering the fact that now these provisos and explanations stand as co-equal subsections.
Sir, this is the only hope for lawyers. Every change made by the parliament is a bonanza for the lawyers. Okay. And there is no, I will tell you in a lighter way. Andhra Pradesh enacted their VAT Act in 2005, changing their sales tax to VAT Act. So one commissioner of Andhra sales tax went to the Advocate General, IAS officer, सर जितना भी प्रॉब्लम था हमने सब सॉल्व कर लिया, सबको हमने ठोक दिया इसमें न्यू एक्ट में. So Anand Babu ने बोला I will never approve this bill. Whatever law is already settled with the courts, don't tinker with it. Okay, what you have gained by 40-50 years, don't tinker with it. Simply follow it. One of the principles which all common law lawyers follow is what has been time tested, don't change. This is not the place for experimentation. This is not a place for entertainment. This is not a place for novelty. So there are bills of ladings, charter party contracts, which are drafted in the same manner as they were drafted 200 years ago, with the same typing mistakes. Books say so. The lawyers don't want to take a risk of a bill of lading which has already been interpreted by the House of Lords to be changed one word also without knowing what is the consequence. That is what wise men do. Okay. I do not want to repeat the other side of this proverb. Fools dare where wise men tread. Okay. Okay. तो हम ये कहना नहीं चाहते हैं. Okay. But this is what his observations are perfectly correct. And there is no known jurisprudence. What is the meaning of irrespective, notwithstanding, never change? Solvent will occur. If you have to start on a clean slate, much of the problem of lease being immovable, etc., can be wished away with. But alas, we cannot start the clean slate. All the problem of movable, immovable, rights are movable, removable. Suppose you have to enact a new law saying by kuch nahi, hum start the clean slate. वो नहीं सकता. Anyway, that's okay.
Saurabh sir, can you read in chat box here? There's some question. Mr. A.K. Srivastava and Mr. Chiran Varghese has raised some question in chat box. Lower side, last one.
Hey, same. He given the same answer. 530 is identical to 294. So the answer is this. My answer, Srivastava sir, was because Kunal Bhai's question was 294 and 1961 Act. He puts the question specifically, therefore answered without that. 530 is also the same.
Sir, one Mr. Chiran Varghese has asked about the circular, sir. Whether this change in the wording of the statute will any implication on the circulars what has been issued prior to this law? In the old statute, whatever the circular that has been issued, how it will be interpreted, say, into the new regime, sir.
But I thought there are already judgments of the Supreme Court. Circulars issued in the 1922 Act will apply to corresponding to the 1961 Act.
Okay, sir. So the
Okay.
same way that we have to interpret here.
I'll give the more accurate answer I will give.
Yeah.
Why he is talking about circulars? After the new Act 2025 Act comes, commissioners are reappointed. All commissioners will be reappointed. All principal chief commissioners will be reappointed. Not needed, because Section 24 of the General Laws Act will take care of that.
Okay, sir.
So, okay. Even if, assume for a minute, Income Tax Rule 2026 is not framed. Okay. Subordinate legislation under the Income Tax 96 will continue unless it is repealed or inconsistent with the new Act. So, circular issued to the old Act will continue if the provision of the corresponding Act, the new Act is there. Okay. The power to issue circular is there in the new Act also. Power was there earlier also. Okay. So, therefore, in view of Section 24 of the General Laws Act, 24 or 8? Section 8 or 24? 8 or 24, one of the two. I'll check that. 24 will be the more correct answer. Okay. No problem. Next.
It is 24, sir.
24. Yes, sir.
Yes,
Saurabh, next question you want me to take?
Yeah. Saurabh, sir, you are on mute here.
Yes.
Same.
So basically, same questions.
Rules and forms also yet to be. They will be notified. Government is making the rules, that they will notify it also, there will be no problem.
There is one question from Mayank itself here. It says that I think in a repeal and saving section 536, it has been mentioned that
Correct.
Yes.
That's the only place where the word previous year is figuring.
Yeah.
Okay. In 530, repeal and saving section में 530, which is the one? 530. Subsections 536 में. He's right.
Sorry.
So circulars will apply, rules and notifications will apply. Okay. While rules and notifications will be reissued, circulars are unlikely to be reissued, but there is no problem. Yes, sir.
There is a question on harmony in section numbering. Do you anticipate a problem in that? Going forward, when budget will introduce the amendments, how will harmony in section numbering be addressed? That will perhaps be a...
No. I told once the Bombay High Court, sir, Income Tax Act is the only act which, on the day it also commences, it will have 42A, 43A, etc. If you remember, Income Tax 1961, it has 242A. At least the first day when you introduce the act, numbering will be continuous number 1, 2, 3, 4, 5, 6. You will not have 48A, 53A, etc. So our friend is asking, first day when the amendment is introduced, what will they do? How will the sequence of numbering will be mentioned? I request him, I hope he is much younger than me. I request him to imagine the shape of this act 10 years from now.
I think, sir, we are concluding on the right time here, and may I request if there is no any questions here from the chat box here, just hold on, sir. I feel there are some questions that I already read here, so I have already covered all the questions here.
All questions have been covered.
Yes, sir. So may I request Sakshi Choksi ma'am from Bombay to just extend a hearty vote of thanks to Sridharan sir.
Thank you, Prakash sir.
Sridharan sir and his colleague, Dinesh here.
You should put your name, Mr. Yes, Bola Sakshi. You are too bored or totally bored or slightly bored?
Not at all, not at all, sir. On the contrary.
Options given are only 3. Choose one of the 3.
Totally intrigued, sir. The contrary. So, a very good evening to everyone. On behalf of the Chamber of Tax Consultants, it is my privilege to propose a sincere vote of thanks for today's session, We are extremely grateful to Advocate Sridharan sir and Mr. Kukreja for sparing their valuable time and sharing thoughtful insights with us. The detailed explanation of previous year, assessment year, and tax year, along with the in-depth analysis of the history of these provisions and the nuances of the relevant provisions of the new Income Tax Act shared today, will surely help all of us in our professional journey. We thank you, sir, for the simplicity in the explanation and willingness to interact and address our queries so patiently. It has been an honor having you inaugurate the premier session of the webinar series. A big thank you to all the participants for their active presence and engagement. With this, I once again express our heartfelt gratitude to Advocate Sridharan sir and Mr. Kukreja for giving us this insightful session, and a big thank you to all the participants.
Sir, it was a wonderful sir deliberation, sir. Particularly, we came to know the history of the assessment year, previous year, and now the newborn child that is called the tax year. And the implications that we thought that it was never thought that implication that you are told about and how the budget will handle all this issue. It is really, really, sir, mind blowing for us, sir. A very good learning that we have got, and we have
No,
blessed.
उनका काम हो सरकार बनाएगी हम will follow that. We are only anticipating what the law will be.
Yes, sir. We are truly blessed with your presence here, sir. We are truly blessed here, sir. Thank you, sir.
Thank you. Thank you
Namaskar.
very much, sir.
Thank you very much.
Thank you.
Thank you, Dinesh. Grateful to Dinesh. He did all the work.
Thank you, Dinesh ji. Thank you. And we wish you a very happy new year to you and sir also.
Same to you, sir.
At least virtually, I am telling you, when I will meet sir in the High Court or Supreme Court, I will definitely extend my again this one, sir.
Thank you. Thank you.
Thank you.
Thank you, sir. Thank you.